Good morning, traders. This is Michael coming to you from GammaEdge on December 11th, Wednesday, December 11th, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend, starting with the market trend model. We continue to see steady selling yesterday, basically compounding on to the previous 2 days. We saw the filtered cumulative tick down 2 days there pretty significantly in a row. Obviously, institutions were selling and overall bearish bias in the market. Yesterday, we finally got that kind of linear down second day selling within the overall price of the market. As we discussed previous and yesterday, go back and review that video. I said the selling usually doesn't always occur for 1 day, and usually it'll be a multiple day selling event once it starts, and that's what we continued with yesterday. Our bias heading into yesterday was weakness. Once we got below 60.50, we anticipated that we would move down towards most likely the bottom of the drunken sailor range at 60.25, which came to fruition in the afternoon. So what do we want to see change? We want to see the bolded CT at least start to flatten out and start moving back to a positive slope above the railroad tracks. Obviously, the red below cyan is pretty significant, and the overall long-term structure or long-term trend is bearish. At the least, we want to see the filtered cumulative tick start to turn back up and live above the zero line if we have any chance of price appreciation today. Heading into the SPXP, all expiries turned on here. We have narrow transition, 60.60 to 60.65. That's pretty much where we stalled yesterday and saw the failure come in. And then we saw the rollover of the market pretty quickly. And then we got under 60.50 and we saw that more weakness came in. We're put dominated above and below spot price. We do see PGEX up there at 6,100 as well as COI. That has not changed significantly. We see index at 60.55 heading into today. So that's really going to be a couple of those areas that I'm watching with intensity and importance. Staying below 60.50, 60.55, 60.60 with a rejection would be an opportunity to short, most likely for more weakness back down. And then above the transition, we'd be looking for 60.70, 75 and staying above that area for a move back up towards 6,100, where PGEX and COI are at. The SPX full complex summary for today. We are call dominated, but note the belly of the structure is put dominated, as Taylor put here. So we'll continue to look at that. The GEX transition is lower for today. DEX transition is lower, and then other key areas are also lower. The SPXP 0DT were put dominated above and below spot price. We noticed the transition widen there. That leads to the uncertainty. We also noticed the expected move is up to 0.71% compared to 0.4 yesterday. So the volatility is increasing. Again, PGEX up there at 60.70. So that's going to be an area we're intently watching for some stalling and rejection. You see all the in-the-money puts basically through the transition and above the transition. We've drawn the drunken sailor range at 60.70 to 60.30. We may have the opportunity, if we fail within this overall range, to test back down towards the 60.30 level. If we did get below 60.30, I'd anticipate some more weakness down towards that 6,000. You see a pretty significant amount of in-the-money calls below that. Obviously, we reference the net stat command and vol m command intraday to get a overall view of what is happening with the overall sentiment and structure. Here's the SPX 0DT summary for today. Call dominated in left-hand plane. Right-hand plane is put dominated. Gamma condition obviously is put dominated. We notice that the GEX transitions are lower, DEX transitions are lower. Obviously, these are both bearish as the structure continues to move down. And then the drunken sailor range, we see the top is lower at 60.70 and just slightly higher there at the bottom at 60.30. And then the other key levels that we want to note. The net stat command, obviously 60.60, that right-hand plane is going to be really important. We see the in-the-money puts there. Obviously, the net charm. And we see OTM calls here, OTM puts, and then in-the-money calls at 6,000. As I just discussed, if we get below 60.50, 60.30, I'd anticipate that left-hand plane strike. In-the-money calls at 6,000. to hold and be a demand area where you could possibly look for a trade off of that, depending on what the MTM is doing, and then what the overall vol-m command is doing. +1 DTE, put dominated above and below spot price. That transition expands as we talked about, leading to more uncertainty heading into the rest of the week. 60.90 up there at was where peak X is, and then NGX is 60.50. So as I said, that confluence of 60.50, the bottom of transitions, where we broke down yesterday is going to be really important. You kind of see a mixed bag below transition here on the +1 DTE, only 200,000 net OI as we head into Thursday. We've discussed that multiple times here at GammaEdge. Tuesday and Thursday are usually lower net OI days. So we'll continue to watch this structure as we head into tomorrow. The SPX GEX ratio, we continue to see it fall. Understanding we had significant commentary yesterday in the SPX game plan about what this continues to mean. Obviously, short-dated calls not really going into the complex. Short-dated puts overrunning the structure, and the ratio leads to a falling GEX ratio. Obviously, when we continue to fall and get down towards the 1 level, that can become an opportunistic area where we can see a bounce or just above that. So we'll continue to watch this also. The delta balance, basically foretelling that we'll see some weakness heading into the balance of the rest of this week. And then next week, we do have the opportunity for this to rebound, watching that right-hand plane come up, but we do see the left-hand plane and the overall delta balance staying below 0, so that can foretell or project some weakness. Again, not a crystal ball, but we just look at how the options sentiment and structure is positioning for next week. So thesis for today, let's go ahead and look at this. SPX, this is obviously the spread X for pre-market open. We're above the 60-60 level, which is an important level that I'm watching. We could see some more put monetization heading into the open. That could drive us toward that 60-70, 60-75 level. We see in trans there, in P trans, this is obviously the full complex, and then the top of the drunken sailor range. So staying below 60-70, I would continue with my bearish kind of overall broad look. If we continue to fail 60-70, it may be an opportunistic or opportunity to short and move back down towards 60-60. And then if we see some more weakness down towards that 60-50 level. So continue to break the DS into multiple areas: above DS, inside DS, and below DS. So above DS at 60-70, if we hold that and we see the vol-m command with positive slopes on the put and call centroid, I'd anticipate us, and if we get above P trans, I'd anticipate us to have the opportunity to push up towards 60-80 and then probably ultimately 6100. That may be a far stretch for today just because of how the overall structure looks and the significant amount of in the money puts above us. Inside DS, I'd anticipate some choppiness range. I'd anticipate some stalling and choppiness around 60-60 and then pull back down towards 60-50, and below 60-50, I'd be looking kind of for this 60-40. Below that, the bottom of the drunken sailor range would be in play also. So we continue to push here. Pre-market above 60-60. We'll see how we handle that 60-70, 75 range if we get up into that area. Again, if this is just a put monetization event and we do not see OTM calls coming in and the speculation higher, this will be short-lived and most likely stall as we push into that 60-70, 60-75 area. If we do see OTM call speculation come in via the vol-m command and vol-d command, as well as net stat structure changing, then we could see some push up towards 60-80, 6100. So again, we'll watch this. We'll definitely be intently watching the market trend model to see if we get above the railroad tracks, or at least start to see some flattening and selling abatement as we head into these upper levels or chop around within the overall drunken sailor range. So hopefully that helps today. TC3 is off, no P2P trades. Again, let's watch these important key gamma delta levels, just in the overall context heading into the day with the MTM in a bearish state and the overall sentiment and structure in a put dominated state. So just manage your risk today, and we'll see you in the Discord in just a few minutes. Thanks, everybody.